Hi, mining community. Welcome back to another episode of the Dig Geek, the mining podcast. And today's guest is Kathleen Raw, who's an experienced executive within the mining and metal sector and has experience in commodity markets, equities, and finance, and was previously the COO of Barrick Gold, covering their North American region. She has a geology and earth science degree from Cambridge, and we're going to discuss a wide range of topics, including industry competitiveness, investment, women in mining, and much more. So that's welcome Kathleen to the podcast. How you doing, Kathleen?
Very well, and thank you for having me.
No, appreciate your time as well. I know you're a busy person. So for those that don't know you, I just wondered if you can just tell us a little bit about your career, about your background. You've been in obviously investment banking, and then you moved into working within the mining industry. So I just wanted to give the audience an overview of your career.
Well, you can't accuse me of being an investment banker. I was in fund management. They're very different things. In finance, yes. Well, as you said, so I studied geology or specialised in geology as an undergraduate, and then decided that mining was more interesting than oil and gas. So did a mining master's at Imperial, actually, mineral project appraisal. Really with the aim of getting that financial evaluation aspect that was lacking in the sort of more technical geological background that I'd had. And that led me into the city. So I then spent 12 years at BlackRock, what was first Merrill Lynch Investment Managers, and then got taken over by BlackRock. And it was a fantastic experience. So I joined there just at the bottom of the last cycle, so 2002, 2003. And watched, what was a relatively unloved sector, particularly the gold space at the time. And because we had established funds, we had the what was the Merrill Lynch Golden General Fund and the Merrill Lynch World Mining Trusts that became the BlackRock equivalents, really start to gather momentum because they had the track record and the experience, established team, and then were able to really take advantage of the China super cycle and the impact that was having on commodity prices and, more importantly, on the mining sector. And so learned a lot very quickly, got to go to amazing places. So I covered the former Soviet Union and was going to places like Uzbekistan, Kazakhstan, Kyrgyzstan, got to go to Vale's assets in Brazil, really got to go to all of the cutting edge front of the sort of sector geological frontiers and understand the investments there and what the opportunities were, and see them going from exploration developments then through the pains, trials and tribulations of development into production. Went through the financial crisis, came out the other side of the financial crisis, then into the sort of second part of the bull market, and really began to see whether the promises were being delivered upon by the mining industry. And what we saw was, as with all these things, is that the chase for growth at the time meant that the discipline associated with investing that capital, the practical implications of trying to build that much that quickly across the globe, and the obviously challenging position that when that supply comes online, what the impact is going to be on prices, and what happens when the Chinese economy doesn't grow at 10.5% per annum, and what are the consequences on demand when all of that supply is coming online. It taught me a lot about the importance of risk, the importance of long-term pricing, the importance of being a good custodian of shareholder capital, the importance of environmental and social license to operate, and how the successful projects were the ones that were able to balance the qualitative with the quantitative, were able to deliver wealth gain to communities. All of the conversations that we're having now in the markets about ESG, that previous experience really gave me firsthand knowledge of what good companies were, what bad companies were, and ultimately helped inform my own views on how to run a business, how to manage those often conflicting constraints. And so when I got the opportunity in 2015 to join Barrick, it was a great time because markets were flatlining, gold prices had fallen. I took the view that they'd were close to their bottom. I accepted the role at Barrick, I think in May, and the bottom of the gold market was in November. And I remember because I was off at the time, I'd just come out of having a baby, had just joined Barrick. And I thought, what am I doing? Gold prices are 1,050. And fair enough, I thought it was the bottom, but I didn't think it was going to carry on going down. Luckily, that was the bottom. And then we saw the gold price pick off. So it was both for me a sort of asset allocation decision with my career, that the gold cycle was changing. And also that Barrick, with very high quality assets, a stressed balance sheet, but ultimately a business that was unique in the gold sector, was very well positioned to benefit from a rising gold price. It really seemed to me an opportunity to put some of what I'd learned into practice, and then spending 6 years, 3 years as CFO, and then 3 years in operations under Mark Bristow, who, is hugely experienced and was one of those companies that had successfully taken a company from an explorer developer into a producer over that previous decade. For me, it was such a fantastic learning opportunity. And then in 2022, I decided to see what other industries can teach me. And really whether the challenges associated with the mining industry, that boom bust cycle, the need to invest over long term, how to manage risk when committing to those long-term projects, whether that's the same thing that we see in other industries, the search for talent, trying to attract good people, trying to find your purpose in today's society. All of that led me to just seeing what else was out there. And I've just started in the power sector, and it equally is as fascinating to me as the mining industry still is.
So obviously you were a successful fund manager. What made you move into the mining industry? Obviously, you mentioned the gold price was hopefully at the lowest, which it was. But what made you move into the mining sector and want to work for a miner?
Well, I think for me, the critical thing was every day as part of my job for 12 years, I would meet management teams of mining companies, whether it was junior explorers or it was the CEO of Rio Tinto on their quarterly roadshows. We would sit across the table and we would ask them questions as if we knew what the answers were. And first, as an analyst, I'd sit quietly and just make notes. And then as I became a more senior fund manager, I was the one asking the questions, and I was the one critiquing and, piling pressure on when the share price was down and lauding them when the share price was up. But ultimately, I particularly after we saw the rollover in the bull market in that China super cycle, and this importance of what is the right long-term pricing to assume. How do you manage risk when you're dealing with governments, when you're dealing with communities, when you're dealing with very different stakeholders? I realized that actually a lot of the problems that were caused, this rush to invest, that growth at growth's sake, not understanding the value at risk and expecting perfect execution on projects. This question on what is the right equilibrium price to assume when you're investing over a decade or 20 years or 30 years. And also the definition of value. In finance, you're obsessed by discounted cash flows, but actually from a risk perspective, perhaps better not to put all your capex up front in order to deliver your value up front, but perhaps better to phase your investments in order to manage the risk and build relationships and then establish a presence in a country. So all of those questions, I began to question myself and actually say, well, do I know what I'm talking about? And so for me, the opportunity came to step into management's shoes. And from a credibility perspective, and on the basis that it would make me potentially a better investor in the future, I could always come back to it. It just seemed a chance for me to literally put my money where my mouth was and say, well, can I do it any better?
You mentioned obviously Mark Bristow. What would you say now? Obviously, you're not with Barrick. What kind of things did you learn from him, or take away from obviously working alongside, obviously arguably one of the sort of more senior, one of the senior figures within the mining industry?
I think one of the biggest things I took away, both from him because he articulated it clearly, but I think more broadly from my experience at Barrick, is the need to be part of the solution rather than part of the problem. And what I mean by that is if you have stakeholders that want you there, so whether it's local communities, in the case of Nevada, the state government, whether it's emerging markets or developed markets, I think essentially those are your big stakeholders, the government and your communities. If they want you to be there, if they need you to be there in order to thrive, then you're much more likely to be successful. The discount rate you apply to your investments are much lower than the market would price. And that's your ability to add value and create value, is that essentially you de-risk your projects in a way that will add value over time as the market begins to recognize that. You'll grow your NAV as a result. And I don't think that's taught anywhere in any textbook, is that ability to define the risk outcome based on the way you operate and the way you engage and how you define the contribution you're going to make. And it's not always monetary, it's across the spectrum from social investments to employment to taxes. It's the nature of how you contribute to the communities that you're within, and that you become essential to their being able to fund their own aspirations. I think that was the biggest lesson, and I think you saw that in the early Randgold days and establishing themselves in Africa, and it was the reason they were able to operate in Mali, in Cote d'Ivoire, in areas that were very risky in comparison to other countries, but yet they constantly delivered day in, day out. And that is just as true in Ontario, in Alaska, in Nevada. And so that philosophy, I think, is the biggest takeaway I've got from my experience at Barrick.
You're from a finance background. It seems funding is a little bit tight at the moment. So I just wonder why that is, and what do you sort of see happening to bring more more capital into the industry?
Well, I think there are two aspects to this. There's the sort of immediate, what you could describe as tactical or cyclical issue, and then there's the structural one. So the first is around people's expectations of where commodity prices are going from here, and specifically the gold sector is particularly challenged, I think, because with all of the chaos that we're seeing today, inflation, interest rates, effectively what the market is telling you is that it's better to own the dollar, that you'll get a better real rate of return owning the dollar than you will by owning gold, and that real interest rates are rising faster than inflation is going to impact them. The assumption, I presume, if you take the gold price is a direction of the market sentiment, is that ultimately the central banks will gain control. We're not facing runaway inflation, and therefore better to hold a currency that will deliver you a good return than own gold that doesn't deliver you any kind of return. So until that dynamic changes, and I think it will, I think ultimately stores of value, as we've seen since the financial crisis, are increasingly important. That focus on diversifying your wealth away from traditional investments, I think, is a theme that we've seen across the whole of the investment space. I think, therefore, gold is not, something that does not, I don't think it's going to collapse. But how do you encourage investors to see that that turnaround is coming? When is it coming, and how do you position your company to benefit from that? One of the biggest challenges gold companies always face is that they outperform in a down market. But that's when people don't own gold equities. They own gold equities in an up market. So what you're doing is establishing your credibility for then to be bought in an up market. So that's where I think the gold industry needs to focus, is establishing that credibility in protecting value during a period where the gold price isn't actually delivering beta. So that's the first sort of tactical one. And for other commodities, you're facing something similar because we're all worried about recession. I think the obvious opportunities are the ones that are structurally going to benefit from the net transition and from really the electrification of the developed world, which is likely to happen over the next 20 years. I speak as someone who's in power, so obviously I'm pro that. The structural one around investment management actually is the lack of quality investors and quality analysts. So one of the things that also led me out of fund management was that active investing was under threat. That unless you could deliver hedge fund-like returns, you were then pushing to passive. So it was becoming a barbell environment in the investment world where it was either alternative investments, hedge funds, or passive equities. That middle ground of benchmark plus active managers that we'd all got used to over the last 30 to 40 years is, I don't believe it's going to, exist. It's a shrinking part of the overall market. And what that means is that there are fewer people looking at that mid-tier, small cap to mid-cap space. And unless you can really deliver a groundbreaking return that a hedge fund is going to be excited by, it's going to be hard to really raise capital in public equity markets. So that, I think, is a structural challenge, and ultimately one, eventually, I think passive management will lead to problems that will encourage active managers back, but it may take a while.
How was Barrick as a company, and I suppose what you saw, what were some of the good things they were good at, and what can sort of other mining companies learn from their governance and also in their operations?
I think the fundamental thing that Barrick was good at was having good geology, and that was really what began Barrick, under the Peter Monk era, was establishing itself by luck or judgment. I won't judge, in areas of huge geological potential, and Nevada is a great example of that. I think the story is always that Barrick bought Goldstrike with only something like 300,000 ounces of reserves, and the area's produced over 40 million ounces, or I can't remember the number, but it's some ridiculously large number. And really what it was able to do was establish itself in this real geological giant territory. And some of that understanding of the ore bodies was lost. And I think that's where Barrick began to lose its way in the sort of 2000s onwards, the late 2000s, where it became acquisition hungry rather than focusing on the assets that it had. And what's interesting since the merger with the Rangod team is that focus on geology and really understanding the ore body and understanding what it's capable of, and therefore de-risking your existing production, but also creating, for free, essentially, huge upside, geological upside in terms of discovering and replacing reserves going forward. I think that for me is the thing that Barrick does best, and ultimately differentiates it from really any other mining company. And there are very few other gold mining companies with that kind of asset base that can deliver that. So that was the first thing. I think the second is around this understanding of its role within the communities it plays. I think that's particularly true with regards to the way the team approach Africa. And I think it's something that we have always understood in Nevada and North America. I think we are now bringing that back to, I say we, I'm not there anymore. They are bringing that back to other regions and areas that have been difficult, such as Papua New Guinea and Latin America. I think bringing that focus of how do we align properly, how are we transparent, particularly in an environment where the truth is often not what governments and communities want to hear. They want to be promised the world. So actually telling them the hard and cold truth about what's possible. I think that is something that the team is really focused on and doing well. And I think that the last thing that Barrick's been good at is leadership, is actually setting some of the conversations the industry needs to have, whether it's around tailings dams or lots of different issues, both from an ESG perspective, but also a reserves, resources perspective, actually having proper conversations and leading the way for the gold industry to establish itself as a grown-up industry.
What did you learn from the other side of the fence that you didn't understand while you invested in companies?
Well, I think very flippantly, it's very easy to make bad decisions and very hard to make good decisions. And what I mean by that is the pressure to make short-term decisions that seem, to hit your budgets, to give people what they ask, to promise things that you don't think you can deliver, but you just hold your breath and hope that you will. The pressure on management to make short-term decisions at the expense of long-term decisions is enormous, and it comes from everyone, every stakeholder, government, community, investor. Everyone wants you to deliver something now and not worry about the future. And that actually, if you want to run a good company and you want to create value over time, you have to think about the long term, and you have to understand the consequence on any decision you make today. And you have to prepare today and often make decisions that cost you money today in order to deliver value in the future. And I don't think I had any clue just how much that pressure to make short-term decisions destroys shareholder value over the long term was. And so that for me, it's made me a stronger person as a result, to be able to stand up to that pressure and push back and articulate why you have to do something that's not immediately popular to whichever stakeholder that you're sitting across the table from, has been a really, for me, a sort of, what's the word? Not to sound too philosophical, but it's made me a better person, I think, as a result.
You're currently the managing director of SSE Thermal, and you've been in the role for 6 months. First of all, I suppose, what made you move away from mining into power? How does it compare to the mining industry? And what can, I suppose, from what you can see after 6 months, what can the mining industry learn from the power industry?
So what's interesting, and a big difference, and I think is probably true for any industry, but what's interesting about power is that it's mining without all of the geology and the mining. So when I think about what's involved in building a power station, when I think about engaging with government, obviously now, given the sort of energy crisis and security of supply issues, and being part of the solution as well as part of the problem, all of that is very similar. The impact of external shocks on commodity prices, the impact of inflation, supply chain, all of this I've seen before and dealt with before and had to manage before. But what's not involved is the complexity, the risk, the unknowns of how you're creating the value in the first place. So I know that the power station works. I know that if we put gas into a gas turbine, that will generate heat and electricity, and that the off gases I can then put into a boiler, and that creates steam that generates power from a steam turbine. These are things that you just know, and they're true every day. The thing that mining is unique about, and oil and gas, I suppose, as well, is no one knows exactly what is going on underground. And there's always this joke that the worst thing you can ever do to a deposit is drill it, because then you start defining and limiting the value associated with that asset. And Mark Bristow always used to make a joke, which is geologists are the only people that add value, everyone else detracts value, because that ounce of gold in the ground is worth its maximum before you mine it, before you process it, before you sell it. And so what's interesting to me is just the complexity associated with that upstream geological risk that you take is then on top of all of the other risks that you take in any other industry. So that's the first thing. The second thing, though, is, and it may be ultimately related to the first, is that the willingness to innovate, the willingness to take risk, the willingness to constantly push the boundaries of what is possible seem to be much greater in a different industry. Now, that may be because the point at which I've entered the industry is just as we enter this net zero journey and the commitments the board and the executive are making in terms of cutting edge technology, putting capital at risk, DevEx as they call it, the talent coming in, the outlook of that talent, the sort of mindsets of that talent and what they want to do, what they want to bring to every day. The energy, excuse the pun, seems to be much greater. And I find that I don't know whether that's a mining industry wide thing, whether that was a North American thing, whether that was a Barrick thing. But that's, if you could capture that enthusiasm and define that purpose, that I see that people who ultimately aren't getting paid as much as they were getting paid in the mining industry to do similar jobs, but they do it because they've just got a different outlook on life and a different energy as to the contribution they're going to make. That has been fascinating to me and something that I would, I wonder about how do you replicate for the mining industry, which I think does have a talent challenge. How do you attract new talent into and quality talent into the industry?
What advice would you give any females that want to sort of move up the corporate ladder and move into executive management? I suppose as a recruiter, you do see there is sometimes not necessarily that easy path into executive management for females. Hopefully it is getting better, but what advice would you give females within the industry that are striving to reach sort of senior management?
It's a challenging question. I think the advice I would give is, there's the warm and cuddly advice, which is be confident. Don't ever feel that you can't do a role just because you don't have the specific experience. But I think that that's not helpful if people aren't willing to look at you. The challenge I've always faced stepping into the mining industry is that it's always been presumed I was a risk, because I didn't have a conventional background. But it would be impossible for me to have a conventional background because I wasn't going to compromise my life, which is ultimately what the mining industry is asking men and women to do, which is to make a choice in terms of working on site, being located in certain places, being away from your family for periods of times. You're being forced into making those compromises. And often women have chosen not to make those compromises. And therefore, the nature of their CV is not going to be a typically conventional CV with, 10 years of operating experience, being on site as a GM for a period of time, all of the things that when I got the role as COO of North America, I had investors. I remember sitting in a meeting at the BMO conference with Mark Bristow and Mark having to defend the choice of me as COO because I didn't have a conventional background. So the important thing is to be able to articulate why that doesn't matter. What else do you bring to the role? And who have you got around you from a team perspective that mitigates the risk, which I don't actually believe is there because there are plenty of very uninspiring conventional executives around in the mining industry. So one mitigates any perceived risk, but ultimately clearly articulates the value that you bring to the role. So if you can create that narrative and you can articulate that clearly to any potential employer, I think it makes a big difference because I think the industry is looking for change. And so, having more women involved is a very physical, symbolic sign of that change. And I know that was a factor in why I was asked to join Barrick by John Thornton, is because he wanted to very clearly and illustrate that he was changing the way the company was being run, and being a woman, being English and not coming up the conventional route was a very clear message to the Canadian and US market for Barrick that was the case. So that was the first role. The other thing, whether it's positive or negative, is that what I have found, and I don't think it's unique to Barrick, but it was definitely true there, but it was true also at my time in the city in London. I found it's less true now, but I think it is true in some scale, is the need to fight. And I don't mean fight as in physically fight or physically have conflict, but that if you're ever seen as someone that runs away from conflict, if you're ever seen as someone that's not prepared to hold their ground which is often a woman's position. And this is me stereotyping, but I know as I grew up, it wasn't a thing to be argumentative, to be overly assertive. But that if you're in an environment that is very male dominated and you don't speak up and you don't hold your ground and you let yourself be intimidated, then you will be, whether it's deliberate or not. And so that would be my advice, which is you've got to a certain extent, play the game as you see it played. And that means you have to establish your position, have a backbone of steel, but don't let that make you aggressive, and don't let that turn you into the bad behaviors that you may see around you. That then they're not the same, but it is not necessarily a feminine trait to walk into a room and say, I'm not going to give on this. And sometimes you have to do that.
And lastly, how do you see the mining industry developing over the next 5 or 10 years? And what direction would you like the industry to move towards? Obviously, you're outside of the industry now. So if you had a magic wand, how would you envisage the mining industry developing over the next 5 or 10 years?
Well, I think the first thing that is already happening, but I think needs to happen on a much broader scale, is being able to explain the relevance of mining to the future generations. That it's seen again as part of the solution and not part of the problem, as it's seen as part of the future and not part of the past. So it has to shed off a lot of the baggage that it has come with, colonial past, exploitation, inequality of treatment of, whether it's indigenous populations, whether it's women, whether it's, whatever it is, it has to truly embrace that it is going to be something different. And it may need to overreact in order to just bring it back to a more neutral position that other industries don't face that same challenge with. So I think that's the first. I think the second is that it needs to understand how it can deliver the same outcomes without requiring the same work-life balance from future generations, because they're just not willing to do it. I was just last week, I was at a graduate conference with Gen Zs, or however they describe it, and their expectation, one, is that they want to save the world. Now, it might be that we've got a particular type, but this responsibility they seem to have on their shoulders, that it's their job to fix things. And so you have to be able to illustrate to them how they can fix things. The other is that their sense of their own rights, what can they expect to receive, is way higher than mine ever was at their age. So this balance of power between you should be grateful that you have a job versus you should be grateful that I'm working for you. The mining industry is still in this, you should be grateful that you have a job and I'm just going to pay you more so that you're more grateful. That doesn't, from my observations, that's not what motivates. It motivates a certain type of person, but that's probably not the person you want in the company. Someone that is purely monetary driven is ultimately not going to look at the round and the whole. And so how do you create an environment where actually you're attracting people that prioritize other things over than earning a living in order to get them to come and work for you? And I don't think mining actually has that yet, because it's a challenging industry in challenging locations, and ultimately there's only so much you can give. But I think the companies that are able to solve that problem, that use technology to do so, that understand remote working, that look at all of these different things and think, how can you adjust in order to deliver a different work environment, I think will be the more successful going forward.
Catherine, really appreciate your time in showing us your wisdom and your thoughts. Obviously, you're out of the industry now, but it's good to get a perspective of, I suppose, a related industry and some of the learnings that you've gathered being in a senior position with one of the biggest gold mining companies in the world. So really appreciate your time and sharing your thoughts, and I'm sure our listeners can take a few things away from this podcast. So really appreciate your time again. And those that are listening, hope you enjoyed that episode. There's a lot of things to take away. So appreciate if you can share this episode amongst others that you know in the industry, because there's certainly a few golden nuggets in there to help educate people within the mining industry that can obviously listen to some of the content that was produced today. So until next time, happy mining.